Welcome to the Retiring Real Estate Investor podcast, where we will discuss how to defer taxes on the sale of your property, earning passive real estate income, and everything you need to know to go from active investor to passive investor. Join us as we interview passive investment sponsors, explore the journey of other retiring real estate investors, and share our due diligence process we perform to select passive investments. Investment advisory services provided by Insight Investment Advisors, LLC, a registered investment advisor. This podcast is only intended for clients and interested investors residing in the states in which we are registered to provide investment advisory services or exempt from registration. Please contact us to determine if the firm provides investment advisory services in the state where you reside. All content on this podcast is for informational purposes only and should not be considered investment advice. Material presented is believed to be reliable sources, and no representations are made by our firm as to another party's informational accuracy or completeness. Insight Investment Advisors, LLC and its representatives do not provide tax or legal advice, and nothing herein should be construed as such. Always consult with your tax advisor or attorney regarding your specific circumstances.
Okay.
Hello, everyone, and welcome to another episode of the Retiring Real Estate Investor. I'm your host, Brandon Bruckman. I am co-hosted today by Julia Fritzlen. Hello, Julia.
Hello.
And we're also joined by our guest, Carmine DiFulvio. Did I do it right?
Close. DiFulvio.
Oh, man. I was telling Carmen before the call, this is the number one thing that I worry about is pronouncing people's names right. And the rest of it's downhill from here. So we'll take it kind of downhill from here. And today, we're going to go into some 1031 exchange thoughts and actions. And Carmen, I think you got a lot to share with us today about 1031s and maybe some legislative things that are happening as well.
Yeah, definitely. We might go down a rabbit hole for a while, but we'll cover as much as we can in the next 5-6 hours.
Yes, that's exactly the average record time that we do. We make Joe Rogan blush. Kidding.
Carmen, no. Do you want to tell us who you're with, what you specialize in, just a little just about yourself?
Sure. Well, again, my name's Carmine DiFulvio. I'm the director of Security First Exchange. We're a national qualified intermediary, wholly owned by Security First Title Company, which is one of the largest independent title companies in the country. Security First has been around since 1944. As far as from a 1031 perspective, I've been in the industry for over 23 years. In my career, I facilitated over 20,000 exchanges, so I can normally answer most questions. I also have a designation of CES. It stands for Certified Exchange Specialist. It's a designation that you can earn if you're part of our industry. There are about 130 professionals in 1031 that have the designation. It's kind of like a CCIM designation. You might be a commercial broker, but you need to have further education to get the designation. That's what we do. Further education and testing on 1031s with our trade organization. Pass the test, you get the designation. Like I said, about 130 of us, actually right behind me, right there. Wrong hand.
I see it.
That's right there. That's my certificate of saying I'm a designee on 1031. So I'm pretty proud of it. It means like I pay attention. I stay up to date on what's happening in the industry, whether it comes down to what's happening as far as changes to the code or legislatively. So again, I'm pretty proud of it. I want to stay up to date, and I want to be able to relay that information to my clients and to anybody else that has questions about the process. So.
And this is really important because I think a lot of people would be surprised to know that the 1031 qualified intermediary space is an unregulated space.
Unfortunately, it is. We've tried to regulate the industry. We've tried to get the government to regulate. In the 2006, 2007, we had some issues. There were some qualified intermediaries that honestly had closed down, defalcation of funds, took money from their clients. So as an industry, we reached out to the federal government and said, please regulate us. So there are rules across the country that everybody would have to follow. The Securities and Exchange Commission, we petitioned them, and they came back in 2008 to us as an industry and said, no, we won't do it. There's not enough, best way to say it, there wasn't enough bad actors in our industry for them to set up this regulation, this, process that they would have to manage. So we weren't crooked enough, I guess is the way to say it. So yeah, there are some states that have regulations on QIs, not many, most are out west. But that's what makes it challenging in our industry is that, one state does it one way where another one does it another. So some QIs don't do business in every state because they don't meet the regulations in certain states.
Interesting.
Here at Security First, we're doing everything right in all 50 states. So we can do transactions every place. But I have a friend that owns a company in Maine, and he doesn't do many transactions out west. So when something comes up and maybe he has something in California or Nevada, he might call me and say, "Hey, can you work with my client because I don't do business in that state?" So that's a good reason to be part of our trade organization, the Federation of Exchange Accommodators, that we have those partners in the industry that we can call on, whether we have questions about maybe do I not feel comfortable about a situation, or just so somebody in the industry that can help you out, again, in those certain states where maybe you can't work.
What are some of those regulations on a by-state basis that some QIs don't choose to, let's say, comply with or want to comply with? And then that sort of dovetails into a broader question of, if I'm selecting a qualified intermediary, what sort of things should I be looking for?
So I'll start with the state regulations. The ones that have the most stringent are the state of Washington and the state of Nevada. State of Washington, and again, I say most stringent, and it's not even that stringent. They have certain regulations as far as E&O insurance and fidelity coverage that have to be held by the qualified intermediary, whereas the state of Nevada actually requires qualified escrow accounts. Nationwide, most QIs will, when they're holding funds for clients, they will set up segregated accounts. So if I'm dealing with 1,000 clients right now, we're going to have 1,000 accounts at the bank under each client's name and tax ID number. But that's a best practice in the industry. That is best practice for our trade organization, the Federation of Exchange Accommodators. But not everybody's part of the trade organization. Not everybody follows best practices. I talk to clients that are dealing with other QIs regularly where they don't segregate. They commingle funds. So we don't do this, but if
Do you
we
see her
did,
eyes?
Hang on, let me put them back into my head. Hold on a second. All right, now we're good. Wow.
I'll say it again. They commingle. So what would they do? Let's just say Carmen owns his own exchange company, Carmen's Exchange Company. So I open up one account at the bank under Carmen's Exchange Company, and I stick Brandon's money and Julia's money in that account. So you don't get the FDIC insurance, don't get the interest, and it's all commingled. And obviously that's not best practice. So in the state of Nevada, those qualified escrow and segregated accounts are going to be required. So that's one of the things they passed back in 2007. But again, most states have nothing. There are no state regulations. Like I said, there are some out west. Most of them, and again, I'm overgeneralizing this, but most of them just call for best practices as far as protection of funds. That we can't deposit your funds in, and take your money and go invest it in Yahoo stock. That it's got to be held in some account where the principal is protected, which is what you would expect as a qualified intermediary. But, state of Florida, just to pick one, there are no regulations. So technically, I don't have to do that. If I could further invest your funds and nobody would know. So, and I'm not breaking any regulations. So that's why I would love to see some further regulation. But, like I said, our industry is pretty clean. We've done it right most of the time. There's always a couple bad actors. So because of that, there hasn't been further scrutiny.
Who's that? Sorry, go ahead, Julia.
Yeah, are there QIs out there that's part of their business model to commingle funds in we'll say brokerage account or something like that, and that's how they make money on top of your money? Is that going on?
I don't know for sure because
Don't name names, but
well,
I'm
I don't
just
even
curious.
But we don't know. Are there? Probably, yes.
Wow.
But like I said, the good QIs out there,
Yeah.
and those are the ones that I deal with.
Mhm.
Those are the people I work with and I know in the industry, because I'm not going to deal with what I would call the bad actors. They're not
Mhm.
going to be my friends. So the people that in our industry that go to our conferences and that I know regularly, we
Mhm.
all do it right. We're opening up those segregated accounts. So, when I open up an account for a client, Julia, you're doing an exchange. I've got your money. It's literally going into basically a savings account. It's a money market account. You're going to
Mhm.
earn some interest, not a lot because the banks don't pay a lot on it, but there can be no loss of principal. It's your account with your name and tax ID number. That's the best practice in our industry. And like I said, a vast majority do it that way.
Yeah.
But are there some out there? I know for a fact there are a few out there that don't do it that way. So I
Wow.
guess overall, you want to deal with a QI that does it the right way. You
Right.
want to have that protection. You want to get the FDIC on it because, again, even though it's only 250,000, the average exchange out there it was just over $500,000. The average exchange is about $533,000, and that's the sales price, not the net proceeds. $533,000 sales price, and over 80% of real estate transactions that are 1031s are residential. So most of our transactions are small. It's not this client is selling a $12 million commercial property. Yes,
Mhm.
that happens. But what's the bulk of every QI's business? Bob and Mary Smith selling a residential property for $500,000, wanting to do a 1031 exchange and defer their tax because they know that this is the way they can leverage their money, save some cash, retain wealth, go buy something else. Whether they're buying another rental property, maybe they're moving states. They're moving from California to Illinois. So they want to take that rental property with them so they can manage it. So the 1031 allows them to do that. Or maybe they're retiring and now they don't want to manage property anymore. So they're going to go into a DST, a Delaware Statutory Trust. Whatever the case may be, it's a way to retain wealth and not have to pay the tax. So that's the big picture here is those clients understand that. But sometimes they don't know to ask some of the questions about, like I said, how the industry works and what happens with your money while it's on deposit.
I think we're building like a simple checklist here of who to work with from a QI perspective. It sounds like if you're part of the trade organization, that's a good place to start.
It is, yeah.
You do business in Nevada would be a good place to start too. And then if the answer is no there, then maybe it's asking about segregated accounts. What else would you add to?
So yeah, I mean, if I was doing a 1031 exchange, and again, I mean, I know, but you want to make sure your QI can work in the state you're selling and buying, because maybe I'm going to sell property in California, buy in Florida or Illinois or whatever. Can you do the transactions in those states? That's question number one. Number two, what do you do with my money? Do you segregate the account or are you commingling the funds? How long have you been in business? I think that's always a key too, because I love going. Just over the weekend, I went to a new restaurant. My family and I went to this restaurant that's only been open for like 4 months. Thought, give it a try. Do you really want to do that with a QI? Do you want to work with a QI? Hey, you're my 12th client. Thanks for calling.
I don't even want to do it with the restaurant, to be honest.
Yeah, well, at the restaurant, at least, what's the worst that happens? 150 bucks. You had a family dinner. It didn't work out. You never go back. 1031's a little bit different.
Yeah.
Do you want to work with somebody that's only done a couple exchanges, or do you want to deal with somebody that's been around a while and understands the process? So I think knowledge and experience is a key as well when you're dealing with a qualified intermediary. And you'll find there are tons of people. Again, I could brag of myself all day. The industry is full of experienced people. So you can definitely find some people that have not been around for a year or two, but have been around for 10, 15, 20 years that can answer those questions. We're full of it.
Of your, 20,000 exchanges, what would you say is the average tax liability? Like, what are people, missing out on if they don't exchange?
So if I go with the regular, again, we're talking about, $500,000 exchange is kind of the wheelhouse. If somebody doesn't do an exchange, if I had to guess, we're looking at federal tax, we're looking at state taxes, recapture, depreciation. We're probably looking anywhere from $50 to $100,000 in tax liability, which maybe doesn't sound like a lot, but if I'm selling a property and if I bought it for 200,000, I'm selling it for 500,000. So I've got a $300,000 profit. That 300,000 taxed at maybe 25%. We're talking, $75,000 plus some recapture. So yeah, we're right in that wheelhouse of maybe 100,000 in tax. What would you want to do? You want to pay the tax, or do you want to keep that money and use that money to buy new property? So I'm able to basically, I always say it's an interest-free loan from the government. By doing a 1031, you get to keep your money and use that money to go buy something else. So you're making money on the money you were supposed to pay the IRS. So that's the benefit of 1031 is it's free. It's interest free. And, especially with rates nowadays, I don't want interest-free loan. Where do I get it? Here's how you get it by doing a 1031 exchange.
Right. Right.
When you think about, I 100% agree with you that there are a ton of professionals in this space that have awesome and great knowledge. Where does that knowledge start and stop about how much you can be advising the client? I think maybe you're in an interesting position where, hey, I'm not your tax advisor, I'm not your financial advisor either, but man, I really know this 1031 thing probably a lot better than those other folks that are in your life. How do you sort of think about that relationship, and where do you draw lines about where you can and kind of can't help?
Yeah, that's an interesting question. As a qualified intermediary, we're not allowed to give tax advice. We can't be the client's tax advisor. We are solely a qualified intermediary, which if I take that just as if I'm just going to be your qualified intermediary, what is that role? Well, it's to document your sale and purchase for the 1031 exchange and then hold the funds, because the funds from the sale come to us and then we use that money when you buy the replacement property. So, that's it. So how could I go through this and not give you a word about 1031? Say, no, that's your tax person's job. I could, but that wouldn't be very, good as far as a customer service perspective. So you're right. We have to be a little careful. And I think the longer you've been in the industry, the more you understand what that line is. Obviously we're going to pretty much caveat anything we say by, you need to discuss it with your tax professional. But the more you've done, the more you've seen, then when Brandon, you call me, you say, all right, here's my situation. Well, I've been a part of that situation maybe 500 or 1,000 times. So I know which way you're probably going to go. So I'll steer you in a direction and say, but consult with your tax professional, because just because I say it doesn't mean they're going to agree, because I'm not going to help you file your taxes at the end of the year. So if I say it's good, well, that's fine. But then you don't talk to your tax person. And then in March, you call your tax person and they say, well, I'm looking at this and this doesn't make any sense. What did your QI tell you? And you say, well, Carmen told me this. And they say, well, I disagree. We're going to pay your tax. So having the tax person on board is important. It's vital, I should say. But you're right. A lot of times they're going to come to me and say, Carmen, I don't understand this situation. Talk me through it. And so we'll talk them through, have them do some research and make sure that they agree with the situation. So we can't be a tax advisor, but do we dance the line? Pretty regularly? And it's just, you're right. It's an interesting balance, an interesting rope we have to walk to make sure we don't cross.
And from our desk, it's the same way. We feel the same way. We're not filling out your taxes either, but we've talked to enough CPAs where we're like, yeah, you don't do a lot of these 1031 things. So we need to provide some guidance about where to point and look, and at least get them on the same page. Talk to us about mistakes. What are the mistakes that investors are making when they're entering this transaction? Maybe some common small mistakes, and then the real big ones that if you do this wrong, this exchange is going to get blown up.
So start at the beginning. They forget to call us before the sale closes. Yesterday, we got a call in. For those of you that are watching this later, yesterday was a Monday. And Mondays are pretty common where we'll get a call saying, hey, we closed a deal on Friday, but we didn't have a 1031 exchange set up. I want to do it now. Can't do it. We can't set up an exchange after the closing because the taxpayer has what's called constructive receipt of the funds. The money's still sitting at the title company. That's receipt because the money is due to the seller at the time of closing. So you can't call me on Monday and say, but the title company still has it. Let's get everything ready. No, because we're not going to backdate our documents because that would be illegal, of course. So we can't do it. So the first mistake is you need to call the QI before the sale closes. Can you do it the day of? Yeah. Not a lot of time there to consult with you, but yeah, we do them same day. It happens all the time. So yeah, you got to reach out to the QI beforehand. We'd love a week or two, but could we do it in shorter and less time than that? Yes, we can. So probably that's the biggest mistake, not reaching out. Some of the other mistakes that come up, a lot of clients don't understand that they have to buy new property of equal or greater value. So again, $5 million, $500,000. You sell a property for $500,000, but you had a $200,000 payoff at the closing. So gross, you're going to net $300,000. So the 300 goes to the qualified intermediary. And a lot of clients think, well, I just have to spend the 300,000 to defer my taxes. That's not true. You have to buy equal or greater than what you sell. So it's not spending the 300,000. It's the IRS wants you to go buy 500,000 because you sold 500. You need to buy 500. The reason they created 1031s back in 1921, Congress, because they wanted to keep all of the value in circulation. So if you sell 500, you got to buy 500. If you buy less, that's taxable because what you're doing is there's going to be a retraction in the market because you're buying less. They created 1031s to show expansion, or at least keep the same value so there's no retraction. But what would they rather see? Sell 500 and buy 750 because that's going to, we've got growth now, we've got expansion. So that's the reason 1031s were created. But a lot of taxpayers just have it stuck in their mind, and real estate professionals just have to spend the cash. So you netted 300, you just got to spend 300. Another big confusion about 1031 exchanges. Geez, and there's 20 others out there. I'm just a little at a loss right now, but I would say those are the biggest ones. The time frames, the 45 and 180 days. I did just have somebody that literally forgot to identify property within the 45 days. As a qualified intermediary, we're sending email reminders every week saying, hey, don't forget it's in, June 15th, June 15th, June 15th. And then that last week beforehand, we're actually calling the client. And this one that just happened yesterday, their identification was over the weekend. We spoke with the real estate professional for the client and the client themselves on Friday. We're going to identify over the weekend. Guess what didn't happen? They didn't identify. So it's little things like that. And I guess big picture overall, talk to the QI. Let them know what you want to do, because the realtor sometimes doesn't get it. The broker, bring the QI in, make us part of the team. And then we'll tell you how to do it, or whether you can't, or maybe you can't do it. But that's what happens a lot of times is the client and the real estate professional come up with a plan. They start to institute the plan, and then they say, oh, we should tell the QI. And then we say, well, now there's a problem because you can't do that. So make us part of the team. And that way we can avoid any issues down the road.
I found that some clients or prospective clients that I speak with are surprised when they hear about like-kind property, what that actually means. If you want to run into that, and then also detail debt replacement on a property, that is some of the 2 points in my world that are surprising to folks, confusing. Yeah, just clarify that.
So like-kind, it changed. The definition for like-kind prior to 1997 was like single family for single family, land for land. But in 97, the IRS actually made it easier. They just defined it as investment for investment. So you can sell any investment property, real property, and buy any other real property held for investment, and it qualifies. So single family, multifamily, commercial, land, it doesn't matter. That's a great thing about 1031 is that maybe you are, you are a landlord. You own 3 or 4 houses and you're tired of having to manage 3 or 4 houses. So you're like, I want to sell those. Maybe I want to go into one commercial property or some other thing. I can do that through a 1031 exchange. So, it makes it a lot simpler for you, or vice versa. I had a client not too long ago sell a commercial property in Mesa, Arizona, and he bought 14 houses in the Kansas City metro area. So he went backwards from commercial to residential because he found that the cap rate that he was getting on his investment was not great on this. It was a Starbucks. He wasn't doing so great. So he said, all right, let's go into some residential property. So, we see it going either way, and that's fine. As long as you meet the requirements of the 1031 exchange, it can work. And then you ask about debt replacement. So talking about, so we'll stick with those same numbers we've been talking about. We sell that property for $500,000. We had $200,000 note payoff at the closing, so we net $300,000. On the new property, you need to buy $500,000 worth of property at minimum. Use all $300,000 cash with the qualified intermediary as down payment, and then normally you just say go get a new loan for at least $200,000. But sometimes clients don't want to do that. Can they come up with $200,000 out of pocket and replace the debt? They can. So if you've got $200,000 just sitting in an account, you want to own that property free and clear, you can do that. I don't normally see it on those numbers because normally if you've got 200,000 lying around, what are you going to do? You'll probably go buy another property. But I see that cash debt replacement really often on small debt. You're selling a property for $325,000, which has $25,000 debt. It's almost paid off. So you can't even get a loan on your new property for $25,000. So you replace it with cash, which you can do that in a 1031. Because again, what the IRS just wants to make sure is that there's no retraction. So you don't have to get new debt. At least you're bringing in the cash to replace it. That all evens out. So therefore, that'll meet the requirements for your 1031.
We watch people get lost in the terminology there, where they'll say things like, well, I paid off the note at close. Like, I don't have a loan anymore. I already paid it off. I'm like, well, no. And then we have to backtrack and explain everything you just explained to us about, yes, I understand that, but you used proceeds to do that in essence. And so this is an exchange. You have to think about it as an exchange. So it is a hard thing, I think, for folks to wrap their brain around, I think, the first time that they sort of do that. I wanted to ask you about what's going on from a Capitol Hill perspective. Do we want to go there yet? Or Julia, do you have some more?
No. Let's dive in. I love crystal ball predictions.
I've been holding back for the duration of the call. I know you have some involvement in some of the lobbying efforts going on, because it seems like I would love your history of not just the 1031 exchange, but the attempted repeals of 1031 exchange that seem to happen every 6-7 years or so. It seems like we're in another one of those periods again.
Yeah. So like I said, I got in the industry in 2000, and I had never had a job where it could be eliminated by Congress. And I remember in 2002, they were starting to talk about it. And, and again, I was kind of new in the industry. My bosses were like, well, don't worry about it. Yeah, there's talk, but it won't happen. But I really kind of stressed out. I just got into a new industry and I'm hearing Congress could eliminate my job. It didn't make sense to me. So, it's happened regularly over the years. 2007, there was a possibility, but then the recession came, so nothing ever happened. Be honest with you, the biggest threat was in 2017. I remember I was in Incline Village, Nevada, November 9th, 2017. Now I'm giving you this story. Talking to about 50 brokers looking at Lake Tahoe, and I got an email that Congress had just proposed the Tax Cuts and Jobs Act, which was President Trump's tax bill. And we knew it was out there, but it was all being negotiated behind closed doors. So we never saw anything. But in November 9th is when it came out. And it called for the complete elimination of 1031 exchange. And it was being voted on November 12th. So there was a call to many members of the Federation of Exchange Accommodators, get to DC right away to lobby. So long story short, they ended up getting rid of part of 1031 exchange. We were able to save the real property portion, but we lost what are called personal property exchanges, which prior to the Tax Cuts and Jobs Act, if you owned a business, you could exchange business assets, so they were personal property. Like I remember I had a gentleman I did an exchange for. He owned a bar, and he owned land, he owned the building, but he also owned everything inside. The kitchen equipment, the tables, the chairs, the POS. He was selling that bar in Las Vegas, and he was moving to Chicago. He was moving back home. So he said, I want to do 2 exchanges, one for the land and the building, and then one for the business assets, everything inside. So he did 2 exchanges, valued out, all that personal property. And he went to Chicago, found a business the same way, bought the building, bought the land, bought what was inside with the 2 exchanges. So he was able to defer his taxes on everything, not just the real property, but on the personal property assets as well.
Yeah.
So nowadays, we've lost that personal property exchange through the Tax Cuts and Jobs Act of 2017. It's probably never coming back. And that was just one example. And pretty much you could have exchanged any type of personal property. Some of the more common ones we saw in the industry, aircraft, automobiles, artwork, anything collectible, livestock. I remember the last personal property exchange I did was December 31st, 2017, the last day. And a client called me at noon, noon on December 31st, when you really want to close a little bit early because, it's New Year's Eve, calls in, says, I have a deal closing today. I'm selling my ranch and I'm selling 1,300 head of cattle. And we rushed to set up 2 exchanges, one for the ranch, one for the cattle. He went and sold that. That was a ranch outside of Tucson, Arizona. He ended up moving to outside of Waco, Texas. He bought a new ranch. He bought new cattle. He was able to do a 1031 exchange on all the assets. But like I said, now we lost the personal property. Now, that was what happened in 2017. Now, over the last couple of years, in President Biden's budget, every year he has called for limiting of the amount of gain that can be deferred through a 1031 exchange to $500,000. So if I bought a property for $1 million and I'm selling it for $2 million, I would have $1 million in gain I could defer through a 1031. If this ever went through, I could only defer $500,000 of gain after I paid tax on the rest. The budget hasn't passed, it hasn't gone through, but we are concerned because next year, the Tax Cuts and Jobs Act, all the tax reductions that were done under President Trump, they expire. So 2025 will be a big year to see what's going to happen. I believe the number was there's $7 billion in pay-fors they're going to need to find to retain all of the tax cuts. Where are they going to find that money? Well, I guarantee you 1031 is going to come up from somebody at some point saying 1031 is an option. Let's look at getting rid of it. So that's what we're doing as an industry. We go to DC regularly. Like I said, I was just back there in April, and we met with, as an industry, we met with over 90 legislators or staffers to be able to talk about the value of 1031 exchange on the federal and the state level. So, we try to make sure that we have people there that understand the process, understand the value to the economy, and to their states. Many states, this is a huge income because the more transactions there are, states have maybe state taxes that are generated from a sale of a transaction. Well, if you limit the transactions, there'll be less transactions, therefore less tax coming in. So they like to hear the numbers. And our trade organization, again, the Federation of Exchange Accommodators, we've got a study with Ernst & Young where they've generated a lot of information showing the benefits on the state and the federal level for 1031. So, we keep that in mind and we show them these values, and we just kind of hope that they understand it and are listening. But then the hard part about that is Congress turns over every 2 years.
I was just going to say that's such a frustrating exercise to
I
repeat
think
every
with the
2
last
years.
election, I think the number was just over 160 new representatives.
Wow.
So what you have to do, you've got to go educate 160 new people to try to get them on your side.
Yeah.
So obviously, we want to make sure that the leaders in Congress, House Ways and Means, Senate Finance, we want to make sure they understand the value of 1031 and they don't just say, oh, let's just get rid of it so we can make a couple bucks. Because they say you can make a couple bucks. We can show them through these studies that it actually would hurt the economy rather than boost the economy.
And that's what I wanted to ask you about and I did read that study, and correct me if I'm wrong, the takeaway there is that's a net negative, not only to the economy, but potentially on tax collections as well. What sounds like it would be a positive of eliminating that, you're just going to cause people not to do exchanges. You're just going to limit the amount of transactions, and you're going to eliminate the tax revenue that you would be making from everyone who supports this industry. Were those the big takeaways? What else did I miss there?
No, I think it's a great summary is that, having 1031 stimulates transactions because now you can sell something, go buy something else, and you can defer your tax. And the other thing in this Ernst & Young study that over 80% of 1031 exchangers only do one exchange. They sell, they buy, and then the next time when they sell this other property, they're going to pay their tax. Mm-hmm. So everybody thinks this is a way for people just to never pay their tax. It's not the case. Most people just do it once. Mm-hmm. And so maybe they own that next property for 10 years. All right, you're still going to get the money. It's still going to be collected. And as a matter of fact, at that point, it's going to be higher because now they've had more gain, so they're going to have to pay more tax. Mm-hmm. So yeah, it stimulates growth because there's Ernst & Young also calls a locked-in effect, where they say, if you get rid of 1031, what are you going to do? Well, now, Julia, you either sell and pay your tax, or you say, well, I'm okay right now. I'm making decent money in this property. Maybe I'll hold it for a couple years longer because I'm not willing to pay that tax liability.
Yeah.
So you sit on it. So that's not what anybody wants. Forget about the tax. This stimulates the economy by more transactions, helps real estate professionals, appraisers, lenders, title companies. It helps Lowe's and Home Depot and Menards because what does everybody do when they go buy a new house? They go fix it up. They spend money at Lowe's and those home improvement stores. Everything that rolls into this, the handyman, the tile store, everybody sees a benefit in more transactions. And all that's going to happen by eliminating 1031 or limiting 1031, less transactions, which is going to hurt the economy. It's not going to help it.
Yeah, I'd be curious to know how many exchanges are truly dollar for dollar exchanges also. Folks are often scaling up or consolidating. So there's growth or tax payment.
Yeah, unfortunately, since we don't have good numbers on that nationally because there's so many 1031 exchange companies out there, I can say, again, personally, from what I see, most are higher. Mm-hmm. We do see a couple, go down, but a vast majority, you don't want to pay the tax. So you sold that property for $500,000. So you're not going to find something for $500,000. You're going to find something for $530,000, $550,000, $575,000. So, or you're going to find two properties for $275,000 each. Right. So a majority are going to be a little higher. Mm-hmm. And that's what's going to help the economy grow too. So, and none of us want to see our home values go down or on our investments or on our personal residence. So by seeing that growth, we're going to see the values increase too.
What can people do at the local level? You and I, what can we do? I know that I think your organization has put together a couple different presentations on or form letters to send our local congressmen and senators. Is that still out there? Is that something that we can point people to and have them do that to help save 1031?
So on our website, securityfirstexchange.com, and first is 1ST. So security1stexchange.com. Right at the top of the page, we've got a note that says, President Biden's budget is calling for a $500,000 limit to 1031. Take action. If you click that take action button, it takes you to our trade organization website. And And what you can do is if you just type in your name, your mailing address, and your email address, the website knows exactly who your congressional representatives are. It'll know your 2 senators, it'll know your congressman, because again, it goes by your mailing address. And then we've already got an email basically typed out for you. It just says basically 1031s are good for the economy. Don't limit them. Don't get rid of them. And you can send that email directly to your congressional representatives. If you don't like the email, you can edit it. It's an editable document. But it's a great way to just make your voice heard. And Congress listens. They know that if they're hearing a lot of people talk about a certain subject like 1031s, they know that, one email or one call doesn't represent one person. It represents roughly 300 to 500 people in their opinion. So the more we get, the more they're gonna listen. So yeah, it's a great way to make your voice heard. Again, call your representatives, or like I said, if you want to do the easy one, go to our website, Security First Exchange, click the button, take you about 60 seconds to send this email, and it's done.
Yep, I've done it. I've done it more than once.
You and me both.
I got one nasty letter back from, I won't say who represents our district, but I bet people, if they looked it up, could figure it out. But yeah, we'll keep pounding away at this, because it's going to have to be repetitive, to say the least, as Julia mentioned, with just the turnover. It's fascinating. I wanted to double back to one topic we sort of missed that I know you wanted to talk about, and I was kind of curious about too: title parking exchanges.
Oh, so
the floor is yours. Tell me about that.
I'll start. So a regular exchange, we call it a forward exchange or a standard exchange. You sell something, you buy something later. It's the standard exchange out there. But what if for some reason, maybe you want to buy something first? You're out looking around today, you found a perfect property, but you haven't sold anything yet. So you could do what's called a reverse exchange. And this is one of the title parking exchanges. The reason it's called a title parking exchange is, for some reason, title for the property will have to be parked with a qualified intermediary. So in a reverse exchange, title is parked with us. And the reason for that is, in the revenue procedure 2000-37, these title parking exchanges really weren't even considered back in 1921. But it was understood that they can work. So there was this revenue procedure in 2000 that came out and says basically how we need to handle it. And what it does, it says the taxpayer can't hold title to both properties at the same time, meaning the property they're buying and the property they're selling. So if you're going to buy first, you'd be entitled to both. Can't do it. So the qualified intermediary will take title to one of the properties, normally the property being purchased. Over 90% of the time, that's the title we're going to take. So we create an LLC. It's known as an EAT, an exchange accommodation title holder. And we take title to the property on your behalf. So you come up with the funds, you get the financing, we take title at the closing, and now you have 180 calendar days to sell the property you're trying to sell. Once that property sells, the proceeds come into your 1031 exchange. We pay down the debt, or we pay you back if you used cash to buy the property, and then we transfer ownership of the property back to you. So we're like a straw man. We just held title to the property while the exchange was happening. But once that sale closes, we transfer the property back. You own the property, it's all yours, and you're done. And in the middle of that, while we're holding title, you still manage it. You still collect the rents. You still do everything. We're just on title solely to facilitate the 1031 exchange. So that's a reverse exchange. The other title parking exchange is known as an improvement exchange. You sell a property today, and you find a perfect property, but it needs some work. You're doing a commercial property, and you find that you need $100,000 in TIs done, but you've got extra money in your 1031 exchange you want to do it with. So what'll happen is that at the time we close the property that we acquire, we take title again under this EAT, this LLC, because the code says you cannot improve property that you own in 1031 exchange. So you can improve property that we own. So we take title, and then we use the balance of the exchange funds to fund improvements to the property. As long as the money is spent and the improvements are completed within that 180-day window, all the improvements were done while we were on title. We then transfer ownership back to the client within the 180 days. Now the money was used to buy the property and improve it all through the 1031. You receive a fully improved property. Therefore, you defer taxes on the acquisition and on the improvements. So that's an improvement exchange. The other title parking exchange, and that's why they're called that. It's just that for some reason we're going to have to hold title.
Two follow-up questions on that. On the reverse exchange, what's the timelines on that? It's not the same 45 and 180, is it?
It is.
It is. Okay, on the reverse exchange, what do I have to do by day 45?
So it's a little bit easier. So you're going to buy the property first. Again, we're buying first. Now you have 45 days to identify what you're going to sell. Well, you already know what you're going to sell.
Yep.
So identification, is it a formality? Yes. You just got to write down a piece of paper and send it in to us, but you need to do it. And then you have 180 calendar days to sell.
Got it.
So
Okay.
you're just reversing the process. The exchange is all in the same time frame, 45 and 180. And then on the improvement exchange, the 45 and 180, the 45, you have to identify what you're going to buy and the improvements you're going to do to the property. Like, if I'm fixing up maybe a house, I might send in, with the identification of 1000 Main Street, I might send in also invoices from vendors saying, all right, I'm replacing the carpeting for $10,000, and you submit that as part of the identification, and roof repair for $8,000, and cabinets for 12, all these other things. You submit those as part of the identification within the 45, and then again, you have to complete within the 180.
So is the risk to the first reverse exchange you not being able to sell your property? That is the risk.
Right. But then what's the tax liability? What if you don't sell within the 180 days? How much tax are you going to owe? And it's a trick question.
I guess none.
None, because you didn't sell anything.
Right.
So the risk is you're going to own two properties. And you don't necessarily want to. Maybe you can't afford both properties. You can't afford mortgages. So a lot of lenders that will lend on reverse exchanges will actually do bridge loans for 180 days to see, all right, did you sell within the 180 days? And then what has happened in the past? If you don't sell within the 180, I've had clients that will say, all right, now in 6 months, I'm finally able to sell the property. I'll do a regular exchange, a forward, where I'll go buy something new. The problem is you just can't tie those two properties together anymore.
Gotcha.
You already bought the other one through the reverse exchange. You can't sell that property 2 years later and then use the money to come back to that purchase. That's done. But you could sell it and go buy something else.
And for the improvement exchange, sounds like there's a lot of variability there, because your carpenter's estimate on what they plan to complete in the 180 days is maybe going to change.
Yeah.
And then is that work done in that time frame?
So it was a lot easier pre-COVID. I don't think I ever heard the two words supply chain together. And now that's all we talk about, supply chain. I never had clients worry about that for an improvement exchange. They were able to get what they wanted and get the work done. It's become a lot harder in the last couple of years. So you really need to have your ducks in a row. You've got to have everything lined up. You've got to have your vendors lined up. You've got to have the product lined up. I should rephrase. If it were me doing an improvement exchange, I wouldn't sell until I had everything ready to go. I know what I'm going to buy. I know who I'm going to hire. I've got everything ready to go. Now I'm going to sell. But now my 180 days is starting, because I want to close on my purchase as soon as possible. So I have as much time as I can left in the 180 days to give my vendor time to get the work done within that 180-day window. So you really need to have it all lined up, But again, do I know people a little more aggressive than I am? Yeah. If you can get it done,
Do I need, at the end of that 180-day period, do I need a final appraisal on the work that I've done there? And then how does that process work? Would I submit that to you, or does my CPA need to have that on hand to file taxes? How does that work?
So that's a great question, and I don't have a great answer for you. The IRS has never said what's necessary to prove the work is done. So what what do tax people recommend? What have I heard recommended? Appraisal would be good. Maybe it's a smaller property, you don't want to pay for an appraisal, and maybe you don't want the property reappraised because that can increase your tax too. So I've had people go out there with their phones and take pictures of the property to show and get the pictures notarized to say that this work was done within the 180 days.
Yeah.
It's what your tax person is going to be comfortable with, because odds are 1031 doesn't cause an audit. So it's, if you're ever audited, how can you prove that the work was completed within the timeframes? So I would say talk to you can talk to your tax person. What are you comfortable with? And whatever that is, we don't require anything, Brandon. So, as far as the QI, we just fund the improvements, and we say, you do what you need to do.
You're looking for a disbursement of all funds before that 180-day timeline.
And if not, then whatever's left over would be taxable.
Yeah,
if you have 50,000 left, then we give you 50,000, you pay tax on the 50.
Fascinating. That's really interesting. Carmen, this has been awesome. Thank you for coming on, and thank you for the work that you're doing. It's thankless work to lobby our friends in Congress. So thank you from us for doing that. You're helping a whole bunch of people in this industry and supporting this industry, and ultimately our end users and customers are the ones that you're helping too. So I want to thank you for that.
No, I appreciate that. It's when you've been doing it this long, I can't imagine doing anything else. And whether it's self-preservation or whether it's just, it gets a little frustrating when I hear Congress what Congress thinks, and we get this a lot. They think this is a rich person's problem. Yeah. Only rich people do 1031s. And that bothers me to no end. Mm-hmm. I deal with, again, over 80% of transactions are just Bob and Mary Smith selling a house. Yep. Right. They just want to save a couple bucks because maybe that helps them, because they have a rental house, or maybe they have 2 rentals, and it helps them so they can get their kids through college, and they're not rich. Mm-hmm. So we've got this benefit. There are so many benefits out there for, if we're going to say for the rich, here's one for the regular people. There are a lot of people that own investment property. Let's give them a benefit, because what are they doing? They're helping the economy. We need to have rentals out there. There are some people that are never going to be able to afford a house, and that's okay. Well, let's go ahead and let's make sure there are good houses out there for them to rent. And those are what my people are doing. My people are not slumlords. My people own nice houses. Again, they just rent out to regular people. Right. And so it bugs me, is probably the best way to put it, is that when they talk about 1031s for rich people. No, yes, rich people do them. Rich people, well, we all need cars. Rich people have fancy cars. We're not going to get rid of cars. Yeah. Why are we getting rid of why do you want to limit or get rid of 1031?
We could probably spend another hour talking about the impact on ranchers and farmers as well, which is probably another aspect that maybe Congress hasn't thought about when they think about 1031 exchange.
And we do see a lot, tons, especially in the Midwest, of course, families that have owned ranches for years, and the grandkids are inheriting the farm, and they don't want to farm. They're not farmers. They're like, all right, what do I do with this? I'm going to have a boatload of tax, or let's go ahead and let's sell the farm and I'll buy a duplex, or I'll buy 2 duplexes with it. Let's let somebody take the farm that's going to farm, and I'll take the money and I'll go buy something that I can invest in and then show return for my family. So that's a huge benefit of 1031. And again, what happens if you get rid of it? Then people are, the tax that's going to be due, or the people are just going to sit on it, never sell the farm. Yeah. And that's not it either. If you own something, let's let people work it. Let's let people use it.
If that describes you, please call Julia and then immediately call Carmen and get something started of transferring that farm or ranch. It'll get you moving in the right direction. Carmen, thank you again for coming out. What's the best place for folks to find you?
So you can find me on the website, securityfirstexchange.com, or you can reach me at 855-446-1031. Catch that? 1031. Yeah.
I love it.
Hey, that's what happens when you've done 20,000 exchanges. You get rights to those cool monk ears at the end where people can remember exactly where you are.
There you go. And I've got a team of people with me. Feel free to call in, shoot me an email, give me a call. If I'm around, I'm more than glad to talk to you. Like I said, I'm the director of our operations, so I kind of travel a lot. I'm not always available. I do a lot of education on 1031s. But if I'm here, I'm more than glad to talk to anybody because, again, this is what I do. I talk about 1031s. So
That's awesome. Again, thank you so much for coming on. And thank you everyone for listening. Until next time, take care.
Thank you.